this point, it's really driven by liquidity. It gave us a 3 months heads up to exactly the correction. And yet Twitter said it's about tariffs, it's about the end of the world. It told you. It is telling you and told you it would be at all-time highs. I told you it would be at all-time highs by May. It tells you we should be over 140,000 by July. And you don't want to believe it. And then it will break down once you all do believe it, and it'll start outperforming, I think. Yes, Mr. President. Yes, no, absolutely. No, the banana zone has started. Yes, no, Bitcoin hit an all-time high. Next up, it's alts. It's the banana zone. But listen, I'm sorry, Mr. President, I have to cut you off because it's drinks with Raoul. We've got some shit and some chaos to cause. So I'll talk to you later. Okay. Make sure you stacked up on your Bitcoin. Bye. Right, sorry about that. You know, I'm in the great state of Texas right now. I'm now a very important person, obviously. It's the banana zone. It's all happening. I've got the merch on. It's all started.
Let's begin with Raoul's most striking message. The banana zone is already in full motion. According to him, people keep asking, when is the banana zone? As if it's some mystical phase that only shows up when everything is mooning. But Raoul made it clear, the banana zone began in September last year when Bitcoin was around $50,000. Today, it's well past $100,000, and yet people still ask when. Altcoins like Solana have made massive moves in that same period, and still investors are scratching their heads wondering why they're not seeing gains.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Over the next 3 days, because that's what you think the banana zone is. That's the thing that drives me fucking nuts with people. Where's the banana zone? When the banana zone? I'm like, when I announced that the banana zone was starting in September last year, it was at 50,000 Bitcoin. It had 110,000 today, and you're still saying when banana. SUI over that period is up, I don't know how many percent, hundreds of percent, and you're still saying when banana. Solana's up huge since then, you're still saying when banana. What it tells me is you are fucking awful at choosing which cryptos to invest in. So your token, your particular token, is not doing well. And you need to look yourself in the mirror and say, do I know what I'm doing? Maybe I should just put it in Bitcoin and just not do anything. It's probably better. But generally speaking, the banana zone is here. It's in play. It's been in play for a while. And I'm going to run you through some charts. Crypto's at all-time highs, and I'm vindicated because I told you so. So there we go. Listen, the dollar is the largest, most important macro variable on Earth. Nothing comes close. The dollar is 87% of world trade. It's how the US adds and withdraws liquidity to the global system. It's how all commodities trade. It is the big daddy. And what we had is the dollar had been in a very sideways range for the whole of 23, 24, 25. Then it started weakening. It got the most oversold. It got 3 standard deviations oversold. And it's somewhat bounced since. Now, why do we care about that? Because every time it does this, the 12-month gain after a drop of that magnitude is huge. We had it in 2015. The NASDAQ gained 18%, 35% in 2022, and back in 2020, 61%. Things like a weak dollar. The global economy loves a weak dollar. China wants a weaker dollar. Everybody wants a weaker dollar. Scott Bessent wants a weaker dollar. Donald Trump wants a weaker dollar. A weaker dollar is the key to making the world go round. And when it happens, things like Bitcoin go apeshit. So the 12-month gain after a large drop in the dollar, 119%, 175%, 592%. These are big deals because the weaker dollar is a change in the denominator of most assets. The S&P 500, also after the DXY, tends to be a very positive thing. So the dollar weakening is hugely positive. It's the chart of M2 versus Bitcoin. This has been so tightly correlated, it's embarrassing. I keep saying maybe it was this easy all along. I've known it will be. I also know it will decouple later in the cycle, and it'll decouple to the upside with Bitcoin outperforming global M2. That's how it works when the crowd come in, the herd get FOMO, they get greed. It actually starts outperforming. Then when the market flips, it eventually starts to underperform as fear kicks in. But at this point, it's really driven by liquidity. It gave us a 3 months heads up to exactly the correction. And yet Twitter said it's about tariffs, it's about the end of the world. It told you. It is telling you and told you it would be at all-time highs. I told you it would be at all-time highs by May. It tells you we should be over 140,000 by July. And you don't want to believe it. And then it will break down once you all do believe it, and it'll start outperforming, I think. But just generally, as a rule of thumb, it will work because it explains the asset moves. And I'll come on to that in a sec. So please just pay attention. Total global liquidity, new all-time highs. It broke out, keeps doing this wedging pattern. That breakout always works. Why does it matter? Total global liquidity is 90% of the price move of Bitcoin since 2013. 90%. So all you fuckers using other stuff, it's like it's this and that, and none of it is true. It is liquidity dominant, and then it's network adoption effects, which is the excess returns. So if global debasement is 8% a year by total global liquidity, that's how much it rises every year. That's how much they're debasing global currency, global fiat. The excess performance is network adoption, which is about 100 and something % a year on top with Bitcoin. When it comes to NASDAQ, well, it's 95%, and it varies between 95 and 97% correlation. The excess return is the adoption of the new technology. So in the adoption of the new technology in NASDAQ, which does about 18% a year, versus Bitcoin that does about 150% a year since 2013, tells you that the supermassive black hole is to own crypto. I know many of you in the stock market can't get your heads around it. Many of the people in the stock market can't get your heads around the NASDAQ being so high. It's all driven by debasement. It's what matters the most. Yes, Mr. President. Yes, no, absolutely. No, the banana zone has started. Yes, no, Bitcoin hit an all-time high. Next up, it's alts. It's the banana zone. But listen, I'm sorry, Mr. President, I have to cut you off because it's drinks with Raoul. We've got some shit and some chaos to cause. So I'll talk to you later. Okay. Make sure you stacked up on your Bitcoin. Bye. Right, sorry about that. You know, I'm in the great state of Texas right now. I'm now a very important person, obviously. It's the banana zone. It's all happening. I've got the merch on. It's all started.
He also notes that financial conditions indices, which include dollar, rates, and oil, are screaming higher, and these metrics lead the ISM by about 9 months. Translation: earnings will rise, businesses will recover, consumer confidence will improve, and when that happens, retail money will pour in just in time to fuel the altcoin frenzy.
So, Trump came in 2017. The world freaked out. Oh my God, we've got this nutcase as a president. He's going to nuke everything. He's going to come with tariffs. He came in and said the dollar's too strong. Genius. Why? Because the dollar makes the world. And what happens is the dollar fell over the first year strongly. What happened this time? We said this before the dollar peaked. We said it's going to repeat the same cycle. And it did exactly as we said. And not only that, it's falling faster than last time around. And you see these wiggles. So this up move we had very similar up moves in the dollar as corrective moves back in 2017. And then it keeps moving lower. That moving lower is what is increasing global M2 because it's in dollars. It's also increasing or lowering the financial conditions or increasing on our charts, which means financial conditions are getting easier for people because of the dollar. Foreign nations can roll their debts. Corporations can roll their debts. That means everybody has more dollars to spend. More excess spending equals faster economic recovery, higher asset prices. So the dollar is in this beautiful cycle. The dollar should hit new lows again. And this little correction pattern is actually important because it plays into the M2 chart and the global liquidity chart, which in the end is what is the key driver of assets, which again, most people don't understand They get caught out in some bullshit on Twitter. I've been trying to show you this stuff forever. Global M2. Global M2 is the real-time pricing approximation of total global liquidity. Total global liquidity is central banks included. This isn't, but we know what they're using the banking sector. Global M2 is rising faster than 2017. 2017, those of you who were in the market then, it was a hell of a year for risk assets. I mean, crypto from the low did Bitcoin from the low did a 23x that year. Now, Bitcoin won't, but something will. One of the large tokens will do something approximating that. So liquidity gushing, dollar falling. All of those things positive. Liquidity. Let's look at the greatest chart of all time. Business cycle. The dollar being in the range for a period of time kept the ISM subdued. The ISM, the Institute Supply Manager Survey, is the best guide to the business cycle. The business cycle above 50 is growing, below 50 is stagnant, below 45 is below 47, 46 is recession. So we've been crawling along, and those of you who run businesses in Main Street, you own a store, or you deal with ordinary people and ordinary things, manufacturing industry, stuff like that. You know that business hasn't really picked up yet. For all of us who have earnings, you kind of know that earnings haven't really picked up yet, but tech companies and stuff have, because they've got a technological revolution going on, they're attracting capital, but generally the rest of us don't. And so it's been a bit weird where the markets have gone higher due to liquidity and earnings haven't. That's typical. That's why P ratios go out, because of debasement. The rich get richer, the poor don't. But eventually, the dollar is one of the markers of this, one of the key drivers. The other is rates. They've always been sideways. Now the dollar is weakening. It sets yourself up for the business cycle to weaken. The dollar is not always the key driver of the business cycle, but it's one of the key drivers at turning points. Bitcoin has been priced on ISM. So implied Bitcoin pricing and ISM. So Bitcoin is priced for a weak business cycle right now. But guess what, children? Our financial conditions index, which is the dollar, rates, and oil, screaming higher, and it leads ISM by 9 months. And that tells us ISM should go up a lot. So that means you guys are all going to start earning a bit more money. Your businesses are going to do a bit better. You'll feel a bit better. I think rates will lower a bit somewhat as well. And overall, the global economy will get better. There'll be more demand for risk assets. This is what drives alt season. As this all picks up, this is the dominant driver of the whole thing.
Raoul Pal's latest breakdown and the clearest roadmap yet for where crypto and macro markets are headed. The banana zone isn't coming, it's already here. Bitcoin is leading the charge, the dollar is weakening, and liquidity is rising. And if you know how to read the signs, you're already miles ahead of the crowd. Remember, these macro tailwinds don't come often. If history is any guide, we're in for one of the most explosive altcoin seasons since 2017. Please like and subscribe.